Hey everybody, welcome to my channel, All Access with Evelyn. Please do me a favor, go ahead and hit that subscribe button. Yes, you're not going to want to miss out on any tea that I'm going to be spilling over the next couple of months. First, we're going to start off with the 2021 tax law changes. As everyone may or may not know, I am an authorized ERO, that's an electronic return originator with the IRS. I am the owner of Evelyn Financial Services. I have been doing taxes for about 10 years. That includes businesses and also individuals. I started off at an auditing firm where I was preparing taxes for companies like Best Buy, Walmart, and I just saw all the refunds that they were getting back, and I knew if they could do it, these multi-million-dollar companies, then so could an individual. So what we're going to start off talking about is the 2021 tax law changes. As you all may know, a lot has changed this year. As I'm scrolling on social media, I see everybody saying $8,000 per child. Just so much going on where people are not really reading into it. They're just going out and saying, oh, you can get this per person. That is not the case. First, we're going to start off on the third stimulus. The third stimulus, if you have not received it, that was $1,400 per person. You can now claim that on your 2021 tax return. As long as the child or individual has a social security number, not an I-10, they will qualify. This was the only stimulus that was affected by the I-10s. Also, with that third stimulus credit, say for example, if someone else received credit for that person and they did not receive it for themselves, it is not required to be paid back. So they can actually go back in and claim it if they did not receive it, which is great for those that didn't receive it. Also, we're going to talk about investment income. Those limits have changed. Now, if you're like participating in Forex, everybody's doing cryptocurrency. As we know, the IRS is now trying to tax those things. You now have an investment income limit of $10,000 in order to claim the earned income tax credit. This is including your capital gains also. So with that limit increasing, you're able to still claim earned income credit even if you're doing things like Robinhood or trading online securities. Also with the earned income credit, married filing separate couples can claim it if they didn't live with their spouse for 6 months and have had a qualifying child for 6 months. That does not mean they have to file that child as a dependent, but they can still claim earned income credit. This is a game changer because as we know, married filing separate, a lot of credits were disqualified under the old acts. Now with this new one, earned income credit, age requirements have changed. You now can get earned income credit at the age of 24. It used to be 25. If you're a student, you can get it at 24. If you're 18 and older and you've been in foster care or you're considered homeless, you can claim earned income credit. If you're 19 and you're not a student, you're working full time, you can now get earned income credit. That's a game changer. There is no upper age limit neither. It used to be where you had to be 65. Anytime you were over 65, you no longer receive earned income credit. Now you can. So that is awesome. Okay. Also, the maximum income limits for a single individual with no kids has changed. Now it's only $21,430. Also, the earned income tax credit amounts increased to $1,502. It was $538 in 2020. So as you see, even someone that is single with no kids is now getting a lot of money towards a refund. Now, if you're that type of person that is claiming exempt, because I know I got them out there. Every year I have a couple of them. So if you're claiming exempt, yes, that $1,502 may be going back towards the IRS to help cover some of your credits. But just as far as that goes, stop with the exempt. Stop claiming 9 all year long. You're hurting yourself. we're going to discuss the child tax credit now. With your child tax credit, now they changed the age limit to 17 and under. It used to be 16 and under. Now 17-year-old qualifies for a child tax credit. And you no longer have to have income in order to qualify. You can have a person that is staying at home, stay-at-home mom, does not work. They can now claim their kids and get a child tax credit. Don't try this on TurboTax now, but it happens. You can now claim your child and have no income and still receive your child tax credit. The child tax credit has also increased. It was $2,000, $1,400 of it was refundable. Now it's fully refundable. It's $3,600 for a child under 6 and $3,000 for children 6 to 17. That's another game changer, okay? And as you know, these monthly payments, the advanced child tax credit, everybody has been receiving them. Some people opted out. When I first heard about it, I was telling all my clients that were making $45,000 and over to opt out, just because we didn't know what the situation was going to be this coming tax season. Now, this is another game changer, okay? If you make $50,000 and under, $50,000 and under, and you're filing head of household, and you claimed a child and you received the child advance tax credits throughout the months, if you receive those credits and now you're getting ready to file and you don't plan on claiming that child, so say you and your spouse switch, you now do not have to pay that money back. At first, it was going to be where you had to pay those credits back. Now, full payment, you get it forgiven. The advances are forgiven if you're under the income limits. Under the income limit is $60,000 for married filing joint, $50,000 for head of household, $40,000 as a single filer. So if you made under $40,000, you filed head of household last year. This year you're only filing single because you're not claiming that child. Now you don't have to pay that advanced credit back. That $250 that you receive every month or $300 you received every month, you no longer have to pay that back. Game changer. These advances will be forgiven. If you're over the income limit, it will phase out for those with the $80,000 limit as a single filer. So it phases out slowly to where you don't have to pay it back if you made under a certain amount. Now, these advance payments will be reconciled on Schedule 8812. So with that being said, around January 19th, the IRS will begin sending out letters saying how much you actually receive with this advance credit so that you can add that to your taxes when you do file. So say if you missed out on a couple payments, you didn't get it. Now that can be added back into your tax return so that you can now receive it. That's awesome, right? Okay, and with the child dependent care credit, everybody gets that confused with the child tax credit. That's totally different. The dependent care credit is actually if you paid out of pocket for daycare expenses, or if you actually paid a family member or individual to watch your child. A spouse that is mentally unable to care for themselves or physically unable to care for themselves, if you paid for a caregiver, you now can claim that. This has been something that you could have been claimed, but now the limits have increased. You must have earned income credit or be a full-time student. It's $8,000 in expenses for one child, $16,000 in expenses for more than one child. You will receive 50% in credit, so around $4,000 per child at max under the child dependent credit. Now, you do have to have proof from your daycare saying how much you paid in for that tax, for that expense. If your child did not attend daycare, they attended after school, you can claim that. But if your child went to like a private institution and you paid tuition for their education, you cannot claim that. Now, only for an event that they went to college, yes. But if it's just a private elementary school that you paid for, you cannot claim that. Also this year, there will be a lot of changes with the new 1040 form. With that 1040 form, you're basically having a lot of changes that occurred with the COVID credits. As we know, last year, 401k was not taxed due to COVID. That is back in effect this year. They're going to still tax it. That is no longer happening. That has expired. Your premium tax credits for your insurance is now required to be repaid. Last year, they forgave it. But right now, they have got it to the back where, you had to have health care. If you don't, of course, you will be taxed on that. Your business meals, if you are a individual that files a Schedule C, you now have the right to deduct 100% of your business meal. This is when you're eating out, or if you're having catering done, you now can deduct that. With the sick and family leave, from January 1st to March 31st, you have 10 qualified days of sick days and 50 days for family leave. So say, for example, if your kids were out of school due to COVID, you now can qualify that under the Family Leave Act. Also, if you had a family member that you had to take care of due to COVID, that can be qualified under sick and family leave. There also will be no unemployment exclusion this year. Unemployment is fully taxable this year. So if you received unemployment and you did not have those taxes withheld, that will go against you this year. It may not have went against you last year. You were able to receive another refund separately after tax season. This year, it will go against you. With the retirement, people pulling money out of their 401k, with pulling money out of cryptocurrencies, a lot of people will be affected because it was just not W-2 income this year. This year was phenomenal for a lot of people, I'm pretty sure of. Even in the midst of a pandemic, we still hit all our sales targets. I'm also a real estate agent. I blew that out the water this year. So I just want people to be mindful when they see people putting things on social media as far as how much they can receive in refunds, that is not always the case. You cannot compare apples to oranges, because what one person makes on one end, the other one may not. So I have clients that may make over $100,000 per year, and I have clients that barely make $10,000 per year. So I can't put them in the same basket. I cannot prepare their taxes the same way, because no two tax returns are alike. And I just want people to know that mindset, because when they go out and start comparing refunds and putting it on Facebook, that's not the case for everybody. So just be mindful with the way that goes. If a lot of things that I said today went over your head, that means that you don't need to be preparing your own taxes using these different online free tax softwares, because you're going to do yourself a disservice by doing that. You're not going to get the maximum refund that you can obtain just because you don't know all the things that may be involved. Just be mindful of what you do, so that consult with a professional, so that you won't miss out on any coins that you could have received for this year. As always, we prepare taxes in all 50 states. I accept returns by email. We have a website, evelynfinancial.com. All links will be dropped in the video below. Thank you for tuning in. Don't forget to hit subscribe, and I'll be back with you with more tea on taxes and real estate with All Access with Evelyn.